It appears the uptrend Bitcoin has been in for the last 6 weeks could potentially be coming to an end. Let's jump into today's video and discuss. Okay guys, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day. Obviously, Bitcoin has been losing strength, losing momentum, and obviously decreasing volatility over the last 2 weeks. This 2-week period being the area of which Bitcoin is occupied, this upper resistance zone. This resistance zone being that first breakout target of the falling wedge structure over here, being that macro resistance zone between 22,600 and 24,300. If you've been watching the channel for the last couple of weeks, you would already know that our breakout target for the falling wedge was 22,600, hit perfectly. Ever since we reached that level, guys, we have been telling you, we've been noticing decreases in momentum, velocity, and volume in the charts, signifying a weakening trend at resistance. This uptrend that we have been in is weakening, and it has been weakening. And in the last 24 hours, we have seen not only some structural confirmation, but also some technical confirmation that this uptrend has just initiated a break toward the downside. So we can still flip that, we can still continue upwards, but we're in the very early stages of turning from this uptrend now into a downtrend. So we're going to discuss that today, of course, with the macro, the technicals, the market data, and of course, the broader markets. So without further ado, we'll go ahead and get stuck into it, guys. But remember to smash the like button, hit the comment button, subscribe to the channel. We do daily technical analysis videos of Bitcoin, focusing on the charts, the data, the structure, the price actions. If you're interested in those components of analysis, go ahead and subscribe to the channel. We also do have a Telegram channel, which will be the second link down below. You'll get updates of all of our videos, all of our news events, charts, information, educational posts, so much more. If you're interested in our VIP trading channel, you get updates on exclusive altcoin and Bitcoin analyses and trade signals, entries, targets, stop losses, everything are given. You can see our recent trade on APT over here did over 140% profit on our short, absolutely phenomenal. And you'll also get access to our exclusive group chat with all of our members. Let's go ahead and get stuck into the market data, then the traditionals, and then Bitcoin. So market data, how are we looking? Currently, Feb is red. We said yesterday, it is very unlikely we see a positive February. I think it's going to be quite unlikely we see another green month after what we saw January being one of the most bullish months in Bitcoin's history since October 2021. That's over 14 months we haven't seen a bullish month as strong as January. January was 39.63%. The prior month that we had, which was more than that, was October 2021. If we exclude October 2021, which was only like 0.3% as strong, we're looking at December 2020. So it's been quite some time since we've had such a strong month, and it's very unreasonable to assume that we're going to see an increasingly strong month or equally as strong month on February, when we're not even in a bull market. So we do have to keep that in mind, guys. February, although is historically a bullish month, it is more likely that we do see red this month than it is likely we see green. Moving on, liquidations are up 131%. Volume for 24-hour periods up 34%. Again, this is going to be a lot of longs being liquidated upon that breakdown. As you can see, we had $40 million in longs liquidate as the price rejected and continued down. Obviously, with decreasing momentum, decreasing volatility, decreasing volume, this trapped a lot of people in here. A lot of people are going to be trapped in this area for longs. A lot of people did expect the price to push directly upwards. In fact, we did reject and come downwards. And this liquidation over here, this strong move toward the downside in the last 12 hours has obviously liquidated a lot of longs. Moving on, guys, let's take a look at the traditional markets. We'll start off with the DXY, and the DXY has been gaining quite well. If you've been watching our channel already, guys, you would know we've been discussing the DXY in quite some detail for quite some time now, more in regards to this current structure, this descending channel structure. In fact, we've been discussing the descending channel structure ever since over here, okay? So quite some time, since December. You can notice a descending channel structure is a bullish consolidation. It's a downward consolidation that ends up resulting in an uptrend. The reason why it's a bullish consolidation is because a descending channel structure represents decreasing momentum, volatility, and obviously volume. Okay, when we're decreasing volume, volatility, and bearish momentum, we generally end up strengthening a trend over a period of time to the point at which it ends up being a reversal structure. And this is exactly what a descending channel is. It is a reversal structure. But we do expect the DXY to break upwards here. Will it break upwards now? Hard to say. Unlikely. Possible. who knows? Really, who knows? The question is, when it does break upwards, how high will the DXY rally? We're looking at local highs over here. We're looking at 105.6, okay? That will be the target. We're also looking at some of these low points over here. More importantly, looking at these local highs again, so 107.2, okay? Those are our targets if we do break upwards on here. Again, we do have a bit of resistance above us, as you can see. We are not quite touching that yet. We haven't quite retested it. It's sitting very slightly above us. Until we break through there, the possibility we come back down is still obviously on the table. And of course, if we do come down, the markets will see relief and the markets will rally. Moving on, guys, S&P 500 and Dow Jones. You can see Dow Jones here is in a symmetrical triangle formation. Again, a neutral consolidation, sideways consolidation. Moving from an uptrend into the structure gives it a slightly higher probability of a continuation toward the upside. Again, like we said already, we're not looking for a directional move until we get a directional break. Directional break being a daily candle above either the downtrending resistance or the uptrending support. That candle will determine the direction that the Dow Jones actually moves to. Until then, any sort of fluctuation within this structure between these resistance and supports should be not considered significant, okay? We are actually expecting fluctuations between these trend lines. The only significant data, the only point of significance is when these trend lines break. Moving on to the S&P 500, same kind of thing with S&P 500, guys. We are at resistance here. Any sort of move to the upside right now should be considered not insignificant, should I say. It shouldn't be considered significant unless this uptrending resistance over here, this upward resistance, horizontal resistance range actually breaks upwards. Then we do expect a continuation to 4,300. Until then, guys, a drop back towards supports are very possible if the DXY continues upwards. Bond yields are signifying that US dollar is gaining strength. Of course, this is very, very bullish for DXY. If the bond yields do continue towards the upside, guys, we can expect the DXY to rally, and the bond yields actually have just broken out of a falling wedge structure, which could be leading to the fact that the DXY could potentially be breaking out of that descending channel, and again could add to the fact that this resistance zone Bitcoin is in should be considered even more as a resistance, and even more unlikely we just initially break through it without at least a pullback or a retracement first. Okay, guys, so let's talk about Bitcoin on the macro chart, and then we'll get into the short term. So very quickly, guys, to summarize everything for the new viewers, what is going on with Bitcoin? Well, first and foremost, we had a falling wedge. Now, even to backtrack even more, the bear market is technically over, right? The bear market is technically done. This was our bear market resistance. This resistance here is our descending channel resistance. This is in fact the bear market. We have a descending channel. Okay, this was our macro descending channel. This was actually our bear market here. As you can see, we developed a falling wedge structure as an extension pattern out of the bear market. Straight away, guys, if you know what structures are, if you follow structural analysis, if you do any of that kind of stuff, particularly momentum analysis, you would know that a change between a steep downtrending gradient to a less steep downtrending gradient is signifying a decrease in bearish strength. Okay, it signifies a decrease in bearish strength, a decrease in bearish momentum. Then you would know from a structural analysis, if you have a converging trend line, you have an increase, okay, in bullish momentum as that bearish momentum is starting to decrease in volatility, and more importantly, a decrease in volume. All of those things signify bullish compression at the end of a downtrend. Okay, you can invert it when you're looking at uptrends. It's bullish compression at the end of a downtrend that resulted in a break toward the upside, with the measured move target, again, the first target of the measured move reaching its initial target, which of course is going to be that first high of the falling wedge, this area up over here. So it did actually reach a target perfectly. The question now is on everyone's minds, will Bitcoin go higher? And currently the answer to that is very simple. Not until we break through this macro yearly resistance. As you can see, it did actually act as a resistance in December 2020. So you can see we are at macro resistance right now. So the question is, are we breaking through? So we're going to answer that today. We are much more likely to not break through on the first attempt, as this is very strong resistance. We've had a decrease in momentum, a decrease in velocity, a decrease in volume, okay? And obviously we are at major resistance with the DXY rallying, S&P 500 obviously finding a bit of resistance, and with the economic data coming out with NFP is coming out bearish, again, we are even facing more resistance at this level. What we can see, guys, in the last couple days, or should I say last few weeks, we've seen a very clear bearish divergence. This is, of course, when we see momentum decrease and price action increasing. This is depicting, obviously, a decreasing in bullish momentum, which can signify a weakening in the trend. Along with that, guys, we did see the price action dip into the Gaussian channel as well as below the 50 EMA at the same time, again signifying that this uptrend is starting to weaken. As we see the technical indicators suggest as weakening in the trend, while the price action is right in resistance after a significant move towards the upside, that is a strong indication that the downtrend or a rejection is more likely than not. So moving back to the macro chart, guys, currently this is still a reversal structure until we break over this resistance level here, 24,300 to 25,000. We are not in an uptrend. We are not in a macro uptrend. This is a short-term uptrend as a result of a breakout from a macro falling wedge. This is nothing more than a reversal, okay? For a macro uptrend to initiate, we need to break above this level. That is when a macro uptrend starts, okay, guys? Until then, this is a reversal out of a macro falling wedge, which has actually technically completed. This isn't me saying I'm bearish. Of course, I'm not bearish. I've been buying Bitcoin. I have Bitcoin since 19,200, 17,600, and 16,500. In fact, I want the price to go up, but we're going to remain objective to the facts and the data on the charts. So let's take a look at the short term, guys. What are the technicals and structures saying? So from a technical standpoint, of course, we still have decreasing momentum. We're still in a bearish divergence. Moving on to a slightly larger time frame, we can see that bearish divergence has now extended to a larger time frame. It's extending to 6 hours, it was extended to 12 hours. It's even potentially extending to a higher time frame. Let's check the daily chart. It's even extended to the daily chart. So we're starting to see the bearish divergence extend to higher time frames. Moving on from there, guys, on the 4-hour chart, we can see two things. We saw, number one, a drop below the 50 EMA temporarily, according to the market cipher A. This is signifying weakness in the trend. What does that mean? It means the next time we retest the 50, we are more likely to break below it and then not push back up it, but instead develop a downtrend. So that is what we've actually done now. We've broken below the 4-hour 50 EMA, we've come back and we've retested and we actually lost that level quite aggressively again. Even on the 6-hour chart now, guys, we are starting to flip below the 50 EMA, again signifying that this uptrend is starting to shift toward a downtrend. It is not only now lost strength, it is now developing a potential downtrend. The uptrend is technically now over according to our moving averages. Moving on to the Gaussian channel, guys. The Gaussian channel is again signifying a small amount of support remaining for the Gaussian channel on the 6-hour chart here at the midline, and again on the 4-hour chart at the baseline. If you watched our video yesterday, you would know that we said this signified weakness, okay? This was a confirmation that the uptrend is going into a downtrend, and a break below here is confirmation that the downtrend has started. Okay, so technically, according to the Gaussian channel, the uptrend is very, very weak, but it still has one small amount of support left where it could potentially bounce towards the upside from a technical standpoint. Okay, from a structural standpoint, we are in a different situation. We do have a rising trend line, which we did aggressively break out of over here. As you would know, this is a rising wedge. A rising wedge is a bearish structure. Moving from a breakout analysis over here, looking at the measured move, we are looking for quite a significant break toward the downside if we do follow the measured move target, which could potentially take us down to around 20,000, the high mid to low $20,000 range. The falling wedge structure has been broken toward the downside, which of course is a bearish structural advantage or a structural signal. One more structural indication we're looking for is, of course, a loss of previous low. We'll go back to the short term. We're looking for losses of these previous lows that we developed to confirm the breakdown from this resistance range. So it's quite complicated. We've got a few things. Structurally, we are broken down, okay? Bearish confirmation number one. Technically, the uptrend has been lost. Bearish confirmation number two, okay? Technically, the uptrend, the downtrend has not been yet confirmed from the technical standpoint. So that's neutral. And then finally, from a horizontal resistance zone, The price action has not lost the prior lows of this resistance zone, and therefore we do not have a confirmation of a rejection from this zone as of yet. Okay, we have a confirmation of a rejection from the upper part of this resistance zone at 24,300, but we do not have confirmation yet of a rejection from this entire resistance zone. So we actually are still within that resistance zone, and therefore we could still see some sort of bounces towards the upside. It is unlikely, but it is definitely still possible. So guys, think about that. Have a look at it for yourselves. Don't jump into aggressive positions yet. If you haven't already taken shorts, we took shorts on this upper part of resistance over here. We took shorts going midway through. I would not be loading massive shorts just quite yet, okay? I think you're a little bit too late to be entering into shorts now. Yes, it can continue downwards, but there's not, we're kind of pushed to that lower end right now. So if we're gonna find support, if we're gonna bounce, it's gonna happen around this level. I wouldn't be jumping into late shorts. When we do get that confirmation that this resistance zone has rejected from, then you could be looking for shorts again. What you should be doing now is analyzing the market, scouting over different altcoins, looking for potential setups that would trigger if Bitcoin does correct further and lose these lows. But the loss of these lows is going to be what confirms that next move upwards, which will most likely take us to 21,500, moving almost 21,500, 20,800, 20,100, 19,500. Okay, guys, think about it objectively. Be realistic in your analysis. If we do look again from a structural point of view, okay, we did in fact break down from that rising channel, rising wedge formation. If we delete the rising wedge, okay, we pretend that rising wedge doesn't exist. We draw a horizontal trend line over here. We are still looking for a break of these lows to confirm a flip of this entire range over here. Again, this range here is that rejection or that resistance line on the macro chart. So we do need to actually deviate above that or break below it if we do flip the chart to continue that trend upwards. Until then, we can still push back into it, although it is increasingly unlikely we do so. Okay, guys, I wanted to briefly interrupt today's video to discuss my favorite exchange, Bitget. If you're looking for a safe, honest, reliable, and accurate exchange, look no further than Bitget. You can sign up by the link in the description to support the channel and get access to 3 exclusive perks. That being up to $5,005 in trading rewards, up to 15% discount on your trading fees, and exclusive access to our MegaWhale promotion campaigns that we run every few months. Alongside that, guys, Bitget is a non-KYC exchange, meaning you do not have to KYC. It is completely optional. Bitget also has a protection fund that secures user assets against external hacks and threats in the space. Alongside that, guys, Bitget offers up to 125x leverage on futures with extensive amount of trading pairs and liquidity on the market. I highly recommend signing up to Bitget. It is the exchange I've been using for over a year and a half now, including all of our members. If you're interested in signing up, trading there, and supporting the channel, you can do so with the link in the description. Thanks for listening. Okay, guys, we're going to finish up the video with probably the most alarming thing we have discussed today, and this is the first time ever Bitcoin is rejected on the monthly chart on the 50 EMA. There are 22 days left on this chart over here for the 50 EMA, which we have actually just printed a red candle on after rejecting from. You can see the 50 EMA is represented by this thick red line. You can see, guys, if we do zoom in, this candle has rejected now from that 50 EMA on the monthly chart. The first time in history, you can see the 50 EMA has represented strong uptrend for the whole entire of Bitcoin, of the history of Bitcoin over the last 14 years. We're now officially underneath it and potentially rejected from that level, which could be very bearish. It could indicate again a bearish February and a potential pullback continuation downward slightly, like we saw over here, guys, for a little bit longer before we do break back upwards and continue that uptrend. Like I said, guys, when we break through 20,500, we are going to be entering a macro uptrend. Where does that 50 EMA lie, guys, on this chart over, guys? It lays at 24,300. That 24,300 is in fact that upper resistance zone from our current resistance level, with 25K being the trigger. So again, guys, if we break above 24,300, not only are we breaking through the horizontal resistance range, but on the macro chart, on the monthly, we're going to be pushing back above the 50 EMA. The last time we did that, we never pushed below it again. for a monthly candle. We actually continued into a macro uptrend until the next bull market. So the 50 EMA is going to be a very important level to look out for, and a level I'm going to be watching very closely over the next few weeks, as a potential rejection or strong move upwards is going to originate from here. The next I want to discuss, guys, is of course the 200 EMA on the weekly chart, again sitting around a similar level. This one sits slightly higher, around 25,000, so we have 24,300 monthly for the 50, and we have 25,000 on the weekly for the 200. Again, a massive trigger point for that next continuation upwards. Again, going to be an indication that the trend has flipped now from a macro downtrend to a macro uptrend. Again, that corresponds with what we've been saying over the last few weeks, which is a macro uptrend will only initiate above 24,300 to 25,000. So keep your eyes on that, guys, and we'll end up the video there. If you're interested in becoming a trader, learning how to trade, you can go ahead and contact us at the Crypto Academy courses at gmail.com. We do 10-unit courses covering the basics of crypto, covering advanced TA, risk management, analyzing charts, structural analysis, technical analysis, and so much more. So go ahead and get around that, and we'll see you in the next video. Cheers.